Guys, what's up? It's your boy Sammy. In today's video, I'm going to be talking about the 90% rule. Now, first of all, we need to understand something. As beginners in the market, there are a lot of losses we're going to be incurring. Now, those losses are not really losses per se, they are actually a pointer to identifying you and your weaknesses. Now, what do I mean by that? The market is kind of like a reflection of who you are. How do I mean? Let's say the market is trying to tell you areas in you that you need to work on if you actually want to become what profitable. The forest is like a mirror to you, in the sense that if you are a greedy person, of course, starting up in your trading career, you're going to be opening big positions. Of course, that's the greed starting up there. Now the market might stop you out, telling you that this is what you need to work on, your greed level. Now another thing you need to be aware of is let's say you place a position and all of a sudden your analysis was right, everything was correct, but why are you getting stopped out? Now this is also to test your what patient level equally, now to know yourself what and know if you are patient or you need to work on that area of yourself. And if you get angry, let's say after getting stopped out, you increase your loss size and place in more trades just because what you want to recover from the previous loss. Now this is actually what revenge trading, and it's actually not good for you because it's going to be making you blow up your own account, and at the end of the day you have nothing to blame but yourself. Now where does this 90% rule come in? Now the 90% rule states that traders are 90% of traders lose 90% of their account within 90 days. 90% of what traders lose 90% of what their account or their capital within what 90 days. Now what's the reflection of this, or what's this trying to tell us? It's trying to say that you are actually going to make losses. Beginners traders are the ones that make losses most, and most of them quit along the line and said, wow, I don't think forex is for me. I heard a lot of persons say forex is scam. Like, how can I venture into something and it's not actually moving? Can actually move in my favor a few pips, and after some time I'm losing out. Now they fail to do something. Now this is a natural concept about humans, in the sense that if everything is not working out, it's the fault of the market. It's not their fault. They blame everybody else except themselves. One of the book I was reading, Rich Dad Poor Dad, said it's going to be taking you longer time to fix someone else rather than fixing yourself. Take for example, if you are expecting the market to change in your favor, it's going to be taking you longer time because you are not in charge of the market. But you can actually fix you, in the sense that you align with what the market is doing, and that way you're able to what, stay profitable. Now, one of the things that will make you stay profitable and come out of this 90% of traders that lose their money, it's you identifying few things. I'm going to be mentioning some of them in this video. The first one is your trading rules. Now, if you are a New York section trader and you go to trade London section and you make out losses, the market is not the fault. You are the fault because why? You are decided to go what, against your own rule. Okay, you need to identify what is working for you and what is not working for you. The second one is you identifying your trading strategy. Now I see a lot of folks, if you create videos on YouTube like this, some persons are like expecting you to say some things about strategy. Strategy is actually good, but if you ask me, market is mostly about psychology, and 90% of it is psychology. Yeah, how you manage your ables, how you're able to what, manage yourself. Take for example, you place a position and the market is moving in your favor, and all of a sudden you see a need that this market might reverse, but you start hoping and wishing, in the sense that you expect the market to retrace, then actually return back in your favor. Well, what you're expecting to happen is not actually visible at that point in time. That's your thinking, and the market know that you're thinking that way. So eventually what will violate your what, thinking habit or thinking rule, or perhaps the way you think or your perception, and all of a sudden it goes against you. That way you are losing out your money, and you be like, you get frustrated, and that way you are able to open more position just to recover from the loss that you made. See, the market is what actually what messing with you, but you can actually control one thing, and that's you. Now I read a book and it said Mark Douglas said something about the disciplined trader. He said, actually, instead of wishing for the market to turn in your favor, now look at this first trade that I placed here. This very one that I placed here. This first trade. You can see that the market moved in my favor and hit my target and went above my target, but reversed. Now, if I'm to hold on to that position and be like, this market reverse, let me open another position, I would have made out of what a loss. But I try to target a reasonable what area in the market, because beginners are fond of doing this, whereby the target is always very far, because why, they want to catch the whole pips in the market. That is going to be incurring what losses for you. Okay, it's going to be making you lose out. Now, whatever you do from this 90% rule is, let's say you place a position, whatever you do while your trade is moving in your favor or is moving against you is actually who you are. Take for example, you place a trade and the trade has gotten to what you had a target of 100 pips and the trade has gotten to 50 pips. What do? You start waiting for the market to go and hit your target finally. Yeah, some of the times beginners begin to wish as if they can push those candles up in their favor and what go and hit their target. Well, you're not in control of the market, but there's something you can do. Yeah, there's something you're in control of. One, the first thing you're in control of is to close partials, to close part of your trade while allowing the second one to run. Now, why am I emphasizing on this? Because if the market retraces back and come to a certain level, you can actually place more positions, holding on to your profit. Now, let me give you a typical example. You open a trade for a $200 account, a $200 entry, and the market moves 50 pips. That is about $1,000, right? So what you're expected to do is to close. For me, I close 95% or 99%. Why am I doing so? Whenever I close that position, I'm able to manage my psychology and my emotions, because why? Greed is not in control. I've been able to close profit. That sends a message to my mind that hey guys and Sammy, you are in profit, but you can actually wait for the market to retrace back. Then you risk more. Now, if the market retraces back, I can actually place more trade, holding on to my $1,000 that I have. I can actually place a trade of $100. If it goes against me and hit the $100, I'm done for that day. Now, how much am I able to close up with? I'm closing out with what 90% of my what risk. The market failed, but was I in profit? Yes. But if I said, I want to cash the whole $2,000 account, $2,000 there, so the market should trace back, and I place my entry to my target. It must get to my target, and all of a sudden you discover that the market comes down. It actually comes down and you'll be like, whoa, this thing is failing. I wish it could just retrace back and just give me just, even if it's $300, let me just close out the trade. And all of a sudden you keep waiting. That way you are dealing with your mind. How you will find out that there's this unusual stress in you, in your head. And there's one funny thing about beginners also. They do is they place another more entries and said, this market is finally going to work out. Of course, the market will give you options. So always, it's always giving you alternative, believing that this thing will work out for you. It's always doing that. But you have to be able to manage yourself and have self-awareness in you and know how you think. That is what they call self-mastery. That way you are able to what? Stay profitable in the market. Okay. Now the last one I would like to talk about, which is very important, is your trading plan. Now, you don't just come isolated into the market and just enter whatever place you want to enter, and you don't even know where you're exiting from. You don't know where you're headed to. You don't know what you're going to be cutting out whenever the market reverses or wants to reverse. And what do you do? Now, beginners traders need to understand that trading plan is one of the things that are very important. I mentioned trading rules. I've mentioned trading plan. I've also mentioned trading strategy. Jumping from one strategy to another is not helpful. Every strategy works, but it's your ability to wait for it to work. That's where the key is. The next thing you want to do, like I said, is actually have a trading plan. How many trades are you going to be taking in a month? Yeah, and what's the target? Those are things that need to be well aligned. Like I said in the previous video, if I get a comment about trading plan, I will leave a video about it. So that's all for today. Thank you.